Hello everyone. I wanted to say thank you for being with us today. I'm Claire Hopkinson, the Director and CEO of Toronto Arts Council and Toronto Arts Foundation. I hope you are faring well and you're able to take care of yourselves in these very trying times. I'd like to thank Marcia Adolphe, who's been with us quite a number of times recently, and she's providing ASL interpretation for us today. Thank you. So anyone needing ASL can pin Marcio's video block so that it is the largest on your screen. You'll need the speaker view selected in the top right-hand corner to do this. And although we're meeting digitally today, I'd like to start with a land acknowledgement, a reflection on the sacred ground on which we work, create, and in normal times gather. Toronto has been indeed the site of human activity for over 15,000 years and has been the gathering place of many nations, the Wendat, the Haudenosaunee, the Anishinaabe, including also the Mississaugas of the Credit First Nation. We are grateful and thankful to have the opportunity to live, to work, and to connect here. Now, it's my delight to introduce you to your host for this session, Elahe Marjovi. Before moving to Toronto, Elahe's worked internationally as an arts administrator and an acclaimed set and costume designer. So we're thrilled to have Elahe now on staff at Toronto Arts Council as our theater program manager. And I am very happy she could be with us today to be our host for today's session. So thanks again for being here, Elahe, and I'm going to turn it over to you. Bye, everyone.
Thank you so much, Claire, and hello, everyone. It's my pleasure to introduce our Sam Marinucci, partner with Hogg Shain Scheck, who has graciously offered his time today to discuss taxes for artists and to take your questions. As a longtime arts supporter and a former board member of Toronto Arts Foundation, we are so happy to have you here, Sam, to share your expertise with us all. Today's session will be structured as follows. We will have a short presentation from Sam, where he will give a general overview of the existing and new tax requirements for artists. After this, I will welcome a few artists on the screen to ask pre-submitted questions. For those of you who will be joining us on the screen, you know who you are. Please be sure that your name is listed correctly on the Zoom participant list so that our wonderful stage manager, Rachel Kennedy, can invite you to join via video connection when it's time. We will try to get to as many additional questions as we can. If you have a question now or during Sam's presentation, please place it in the chat box and we will try to address it if there is enough time. This session will be recorded and transcribed and will be made available on TAC's website and YouTube channel in the next week or so. And with that final bit of housekeeping, I'm very happy to welcome Sam Marinucci. Thank you for being here, Sam. Please go ahead.
Thank you and welcome everybody. It's my pleasure to take part in this presentation in what promises to be a tax filing year like no other. Those are the words of Canada Revenue Agency. Anybody who is on the other side and tries to deal with all the changes and everything we've gone through that, I've been saying that for quite a long time. Canada Revenue Agency has actually acknowledged that, and hopefully they will be sympathetic in this, what promises to be a very challenging tax filing year. I will start with a very general and brief overview on some of the key aspects of this filing season, and mostly dealing with two areas. One is the reporting and the tax implications of any COVID-related benefits that artists or any taxpayers received in 2020. And the second main item is dealing with the issue of how to report amounts received by artists in the form of either grants or government assistance. That has been a challenging issue in past years. CRA has provided some clarifications and comprehensive guidance to cover the various iterations on or alternatives in how this income needs to be reported. Of course, there are many, many other aspects for artists in reporting income, expenses, and so on. I've prepared a presentation document that will be made available to anybody who wants after the presentation. It will be far more detailed and comprehensive than time permits for me to go through in my verbal presentation today, but I just wanted to cover the highlights so that there is plenty of time for questions afterwards. So, having covered that, I'll start with 2020, and the biggest issue, of course, is COVID-19. Many of you may have received assistance or income under various programs related to the COVID-19 CRA assistance. If you received either CERB or CESB, which is the Emergency Student Benefit, Canada Recovery Benefit, Canada Recovery Caregiving Benefit, Canada Recovery Sickness Benefit, or some provincial or territorial COVID-19 support, you will receive or should have received a T4A slip reporting the amount of income received. As you should know, those amounts are going to be taxable amounts when you prepare your return. In the case of all items except for the Canada Recovery benefit items, there would not have been any tax withheld when you received your initial payment. So depending on what the rest of your tax return looks like, there may or may not be taxes owing by you upon filing of the return. You should receive one T4A slip from CRA to cover all amounts under those various programs at the federal level. And if you received anything from a province or territory, you would receive a separate T4A slip on that. That applies if you obtain these payments by filing directly with Canada Revenue Agency. Some of you may, at least initially, have received these payments through Service Canada in conjunction with employment insurance benefits applications. In that case, if you received it through Service Canada, you wouldn't receive a slip from on a T4A. Instead, it would be on a T4E slip, which would report any employment insurance amounts received and any of those emergency benefits that were received because you applied through Service Canada rather than CRA. Now, everybody is aware of the issue that came up. There was some confusion about who qualified for CERB the emergency response benefit, and the question around the criteria for being able to be eligible, that the famous $5,000 threshold, whether it was gross or whether it was net. As a result of that, or perhaps if applications were submitted when in fact the applicant may not have been eligible, if there was a requirement to repay any amounts, then if those amounts were repaid before the end of 2020, they would be reflected on the tax slip that you got for 2020. So if you received an amount and you had to pay it all back before the end of 2020, it would be a wash. There would be nothing net to report. However, if you received any benefits in 2020, were required to repay amounts, and the repayment happened or will happen in 2021, that prevents a bit of an issue for you, because you'll have to report the income on your 2020 return when you received it, but you can only claim the deduction for the repaid amount in 2021. So that could present a bit of a cash flow and a timing issue for you. In the case of Canada recovery benefit amounts, under that program, unlike CERB, the 10% of the gross amount eligible was deducted at source. So if you were eligible for a $1,000 payment for a period, you would have received net $900. Please make sure when you file your return that it reflects that $100 that has been deducted at source. This information would be on the T4A or the T4E slip that you received. In addition to these individual benefits I just referred to, if you were a self-employed taxpayer and qualified for certain other assistance, for example, the wage subsidy, if you had employees that you kept on and received the wage subsidy, or if you received the Canada Emergency Benefit loan, that's the forgivable loan, or partly forgivable loan, or if you received anything under the Canada Emergency Rent Subsidy program. So any amounts received under the rent subsidy and wage subsidy programs in 2020 would be considered taxable income. And you could report that either as income or an offset against the related expense. So again, say you are an unincorporated artist and you had employees who were eligible for you to receive the wage subsidy, you'd have to report the amounts that you did get. Similarly, under the rent subsidy program, which came into effect at the end of September of 2020. In the case of the interest-free loan, that it was initially $40,000, of which 10 could be forgiven if repaid within a certain time period. That was then enhanced to $60,000 total, of which $20,000 total would be forgiven if repaid within a certain time period. If you received that amount, those amounts, you must report the forgivable portion as income for the year received, not when it is forgiven. So that's important because those are big numbers, 10,000 or 20,000. If you receive the full amount of the loan in 2020, you have to report the forgivable portion of 20,000 in your 2020 income, rather than when you repay the loan and it is formally forgiven. If for some reason circumstances are such that you end up not being able to repay the loan within the forgiveness period, and you don't get the forgiveness, then you can claim a deduction at that time. So please keep that in mind. That could be a surprise for some taxpayers. For those who received the Canada Recovery Benefit, now this was the successor to CERB, there is an income test whereby any amounts that you received under the CRB, the Canada Recovery Benefit, may be repayable if your net income, not counting the CRB payment, exceeds $38,000. So you could have received a CRB because you were eligible for it. That's a separate issue, being eligible to receive it, and then whether any of that eventually becomes repayable because your net income exceeds $38,000. So please keep in mind, this is a net income number. That is the threshold. So it's not just the gross amount. All your income sources count except for the CRB portion. So if you're going to be close to that, it's too late now, but there are some discretionary expense items that could serve to reduce your net income and get you under the 38 so that none of this CRB is repayable. And a couple of examples of those, if you have, say, a child care expense deduction, or you contributed to an RRSP, both those items serve to reduce your figure for net income, and that therefore could help in that situation. If your net income figure turns out to be above 38,000, then you would need to repay the CRB amount 50 cents for every dollar that you received. So, and that is above the 38,000. So another announcement from CRA to us that in effect provides some assistance. Say you file your return and for whatever reason you have an amount due to be paid on filing. If you received any of the support payments during the year, so that would be CERB or Canada Recovery Benefit, employment insurance, provincial benefits, and your taxable income was less than 75,000, then CRA will give you until April 30th of 2022, so that's 1 year, to pay that amount, and no interest will apply. So normally, when you file your return, any amounts that are due must be paid by April 30th, or the interest clock will start. That could be a significant relief item given the circumstances where taxpayers may have received significant CERB payments, recovery payments, nothing was withheld at source, and then this all comes home to roost when you file your return and you have to account for any taxes on that. If you are in that situation, you should ensure that you at least file your return on time, because if there's a balance due and it's not paid, and you don't file a return on time, there is an automatic 5% of the tax amount owing as a late filing penalty, and that increases by an additional 1% per month until the return is filed. So file the return, you won't get a late filing penalty, and you then don't get assessed interest for a year, as long as you pay it off within the year. So that covers the COVID related issues. Again, there's a lot to cover here. I'm just doing highlights. I'm sure there will be lots of questions related to that, but I just wanted to give the big picture. The other area I wanted to cover off is how do you report assistance or amounts that artists receive from, say, governments or private sources in the form of grants. There is a fair bit of confusion in this. A lot of the confusion is due to the way CRA has been assessing or dealing with how amounts are reported. And so I will, again, give you a very broad overview. So there's a lot of literature and guidance dealing with income and expense reporting issues related to artists. And when I say artists, this includes writers as well. Late in 2020, CRA produced a very comprehensive document that put together all these various other documents into one, what is called a folio that was meant to cover all of these issues. There wasn't a significant change in how artists' income is taxed or what expenses are allowed or how it's to be reported. It just put it all in one place, gave some clarification so that you don't have to go searching all over, or your tax preparers or advisors have to go all over the place looking for an answer. So this document really is an excellent one-stop source to deal with this information. It will be included as part of the materials that are going to be made available. The only thing is it's 50 pages long, so good luck with that. So the short of it is income that artists receive in the form of grants, assistance, or whatever to promote their art can be included in income in one of four categories. If you receive income in the form of as an employee, that's very straightforward. You will get a T4 slip and you report it on the employment income line on your tax return. You may have income from, say, royalties. You produce a work and you get some royalties from it, either from writing, or if you are directing or a playwright, for example, or music. That can be, you can decide how that is reported. It can be reported as part of employment income, or it could be reported as a part of self-employed income, because it all derives from your efforts as the creator. Or it just simply reported on the line item for other income. So again, it depends on your particular circumstances where best to report that, but that is considered income from property. The third area is if this assistance is in the form of, excuse me, self-employed income. If you receive an amount and you will be getting a T4A slip, And depending on where in the T4A slip that assistance is reported, it will determine how you claim that on your tax return. If that income is reported on what's called box 28, fee for services, then clearly that is self-employed income, and you would report that on your tax return as part of your self-employed income. The tricky part comes when this income is reported on box 105 of a T4A slip. And this is where a lot of the confusion in prior years and the impetus for CRA providing this guidance came into play. Box 105 is referred to as scholarships, bursaries, prizes, etc. What CRA has said, if an amount is reported as box 105, and assuming it is not clearly income from employment or self-employment, in which case presumably it would have been reported on a different box number, then those amounts are what's referred to as art production grants. So if you receive the grant from the Toronto Arts Council and you don't otherwise have self-employed income, it's reported on box 105, then it gets reported in a separate line, other income. The issue that comes up is if you receive these grants, then you are likely to have had expenses to carry out the requirements of the grant or what you received it for. So what do you do with this? Because you have to report the gross amount as income, and since you incurred expenses to carry out the provisions of that funding, you should be able to deduct it. So the guidance that CRA has given clarification on says that you report this on line 13010. Yes, line 13010. It's a subset of other income, but the amount that you report is net of the reasonable expenses that you incurred to produce the results of that grant. You can't claim more expenses than the amount of the grant that you received. You also cannot claim personal living expenses or amounts that have been or can be reimbursed. In addition to that, say you have $10,000 of grant income under an arts grant, you have $7,000 of reasonable expenses, you would report the net of that $7,000. In addition, you are allowed what's called a basic scholarship exemption of $500. So it's an additional $500 over and above the reasonable expenses that you can claim against the grant. So to give that example, take it a step further, the grant amount is $10,000, you have reasonable expenses of $7,000, you have this additional basic exemption of $500, so the net amount you report on box 13010 would be $2,500. So it comes down to your particular circumstances. If you otherwise have self-employment income and it's clearly a grant is related to that, you should be getting a tax slip that shows it is self-employment income. Otherwise, you would need to report it on line 13010, net of the expenses and that $500 exemption. It's already halfway through. Just one more quick item on workspace in the home. If you are an employee, regardless of it's in artistic or otherwise, you'll be aware that, and you had to work from home during COVID, you can claim a $2 a day deduction. Whoop-de-doo, that's not going to do much, up to $400 for the year. Or there's an option to claim a detailed method to calculate the use of home office. For that, you would need to get a signed form from your employer indicating essentially that you had to work from home. And then that is likely to allow you to claim a bigger amount based on your actual expenses and the proportion of your living space that you use to work in, and the portion of the year that you were required or were allowed to work from home. So I think I'm past my limit on the presentation. I understand that there may be a bunch of questions, and fire away.
Thank you so much, Sam, for this eye-opening presentation. Now let's go to the questions. We received many very thoughtful questions from those who registered, a number of which were duplicated or on similar high-interest topics. We have selected 5 questions from these high-interest themes, and we'll do our best to get through them with enough time to take a few additional questions. As I mentioned earlier, please enter any new questions you might have into the chat function. If we have time, we will move on to those. For those of you who are coming on camera to share questions, please be sure to introduce yourself briefly before sharing your question. I'm now delighted to welcome our first guest, Elena Stewart, to ask the first question.
Hello. My name is Elena Stewart. I am a musician, a music artist, and an independent scholar based here in Toronto. And my question is, I would like to know how to file or how to claim deferred grant funds. In other words, say I received a $10,000 grant in August of 2020 for a project that was to occur in December 2020, but obviously due to COVID, it had to be pushed to 2021 or even 2022. How do I file that in my taxes so that it reflects that it's not revenue that will be added to my personal income, but is allotted to specific future expenses?
In your example, did you actually receive the funds and then the project is deferred until future because of COVID, and you didn't start it and didn't incur any expenses?
Both.
Or you received approval and you've yet to receive the funds?
Both scenarios. So one, obviously pre-COVID, received funds earlier in the year for an event that was supposed to happen in the summer. So that's the first I actually received funds that I'm not able to use just yet. And then also have since been awarded a grant where the money has not actually been deposited into my account yet. So I've just received it on paper or in principle.
Okay. We'll start with the second one where you haven't received the funds yet. You don't report the grant income until you hear that you actually receive it. So even if you got approval, say in 2020, for an amount and a project, but you hadn't received the funds yet, then there's no issue there.
Okay.
On the income reporting side, did you incur any expenses yet on the income yet to be received? Significant?
No.
Okay, so not an issue there. Let's go to the other one where you did receive the income in 2020 and it's been deferred. That's unfortunately, that could present a problem because if you received in 2020, you have to report it in 2020.
Okay.
If you did incur any expenses between the time that you received approval and the end of the year, you can claim that as a reasonable expense against the income. The problem arises in that if most of the spending happens in the following year, then and you don't know how much you're going to be spending, you have the way the guidance reads, unless you can reasonably estimate what those future expenses are, you can claim that as reasonable expenses on your 2020 return to, to reduce the impact. If not, and you have to file your 2020 return based on what you received and the expenses that have been incurred, you have to wait till next year when you have the final numbers, then go back and refile 2020 to increase the amount of the reasonable expenses. That's not the most elegant way of doing things, and unfortunately, even though CRA has given some clarification, this is an issue ongoing. It has happened before all this clarification. I had a situation where pre-COVID, the funding was received late in the year. The spending didn't happen until the year after, and it's been 18 months, and we're still trying to sort that all out with CRA. Not meant to scare you away, but I guess in your situation, you'd either have to reasonably estimate what the expenses of the project are going to be, so you can match it against the year that you report the income. Otherwise, you're going to have a cash flow issue if you have taxes payable because you haven't been able to claim the expenses against the full grant income yet.
Okay. And so to clarify, in summary, I have to report that income as income, but net expenses, even though there will be future expenses.
Yes, but the future expenses, if you know what they are with reasonable certainty, you can do that too on your 2020 return.
Oh, I can. Okay.
Oh, if you can, yeah, because it's the way the tax return is set up. You have to report the full amount of the grant, or you have to report the slip, or CRA gets a slip that says, say you got $10,000 of grant income. When you prepare your return, you received the 10,000, but what you report as income is going to be 10,000 less the expenses. So it looks like there's going to be at least a query from CRA. It says, well, we have this T4A slip that says you received 10,000 and you're reporting on your tax return, let's say 4,000 because you had 6,000 of expenses. So they haven't dealt with that very well. There's a real simple fix to that. If on the tax return, it just simply says, the grant amount from the T4A, and then a line below that, expenses claimed, and off you go, and it would avoid any potential mismatch, which could, bring up a question from CRA.
Okay. Okay, thank you.
Thank you. Our next question was an anonymous submission, so I will read the question. I'm presently on ODSP, or Ontario Disability Support Plan, and began a CERB repayment plan in December. Are there any deductions or things I should know to assist me?
Oh, that's This is an interesting one. So firstly, the ODSP, it's not taxable income. However, you have to report it as gross income in the first place. And then you get an offsetting deduction further down on the tax return, so that in the end, you don't get taxed on a net basis for the ODSP. Where that could present a problem is, and it may not be in this participant's situation, if that taxpayer received the Canada Recovery Benefit, not the CERB, and for some reason, the net income of the taxpayer ends up being more than 38,000, and there would need to be a partial repayment or a full repayment of the CRB amount. Where the ODSP thing comes into play, the ODSP received is part of the gross income figure, but the deduction happens after the net income. So it could, in theory, depending on other sources of income, have put a taxpayer in that position over the limit for purposes of recovery of the Canada Recovery Benefit. Now, the specific question related to a CERB repayment, and not sure what the deductions are. If the CERB was repaid in 2020, then there's no issue because it just offsets what was received. If the CERB the CERB would have been received in 2020, and if the repayment happens after that, then the deduction for the repayment doesn't happen until 2021 when it was repaid. So again, that could cause some other issues with the taxpayer depending on other sources of income. So without any more information, I can't give more guidance than that for that example.
Thank you, Sam. Someone in the chat is asking, I suddenly got lost too. Earlier when you mentioned income, did you mean net or gross? I guess in regards to the Canada recovery, about this question, net income.
So Canada Recovery Benefit, there's two aspects for it. First, are you eligible to receive it? And that had to do with what income you had relative to the year before. So if you were eligible to receive it, you received it. Then when you file your tax return, they put a cap on it. What they didn't want is this Canada Recovery Benefit to go to people who otherwise had significant amounts of income. So it's unlike this CERB, because CERB didn't matter. You could have been a millionaire with investment income, and you lost your earned income and therefore were eligible for CERB. This was different. That 38,000 is a net income number, not the gross income number. So, that's why I gave examples of kind of late now because it's after the RSP season. But if anybody was in that situation and they had room in their RRSP and the funds to do so, they could have made a contribution to bring the net income down so that the repayment wouldn't kick in.
Thanks a lot. So now we welcome Ross Turnbull for our next question. You are muted.
Hi, can you hear me now?
Yes.
Okay, thanks for taking my call. I'm Ross Turnbull. I'm a film and video artist, and I also work as the general manager at Charles Street Video, a client of the Toronto Arts Council. My question has to do with grants to individuals and not to organizations. I've received numerous grants from various arts councils and always, of course, receive a T4A slip. So while acknowledging that these slips are issued by the councils, is there a CRA recognized mechanism that one might use to transfer a grant to a personally owned and incorporated company in order to account for that income corporately rather than through personal income?
The short answer is no, but there are other ways to achieve the same result. If you received, if the grant was awarded to you as an individual, then you have to report that income as an individual. If it is for a grant, then what you can do is when the example we gave, it's an art production grant, you receive the T4A for 10,000, and your expenses, you would, receive the money individually. You would transfer it to your corporation, either as an expense, because you as an individual engaged your company to carry out the work pursuant to the grant conditions. So in that situation, you just report zero or whatever the amount that you want to go into the corporation. You don't get taxed on it net personally. On the other side, in the corporation, of course, you'd have to report that as income, and whatever you call it, a fee or a contribution, and then the expenses presumably would be claimed in the corporation against that income. Another possibility is you report the amount of this would be this would not be a charity, right? It would just be
a charity. It's a
forget the other possibility.
Right.
That's really the only way you could do it, is attributed as an expense of you, the individual artist, and the expense is engagement of a corporation. So the income or the revenue would end up being reported in the corporation, and you take it from there.
So in other words,
be careful. There may be some HST issues on all of this stuff.
Right.
That's that's at your level.
Yeah, but so to clarify, it's possible to reduce that income on my personal income tax to zero if the fee to the corporation adds up to the same amount as the grant amount.
Correct. Yeah. Yeah. It's no different than if you did the work yourself as an individual and you had expenses of up to that amount. You would be reporting net zero, as I mentioned in my presentation, and all of this would be on the materials that are going to be made available after.
Okay.
It achieves your objective. The best,
yes.
I'm assuming that the corporation itself would not be eligible to be the recipient. Have you tried that?
I've tried that numerous times with the Arts Councils to have them issue the grant payment to the corporation, and they will not do it.
Yeah, fair enough. It's the ones that do that tend to be not the granting agencies, but if you're in entertainment, it would be like private commercial enterprises that issue T4As to a corporation and stuff.
Right. Yeah, the issue for me personally was receiving grant income and putting it immediately into the company and filing corporately for that income and expenses against, but then the CRA came back and they charged me as an individual for the grant income. So I was essentially, the same amount of money was viewed and taxed twice by CRA.
No, CRA's position is correct in that situation. So to rectify it, as I indicated before, you have to report it in the first place as an individual, and then there's the mechanism to treat it as an art production grant, and what you report net on your individual return takes into account whatever it is that you transferred to the corporation to carry out the work.
Right. So that could just be an invoice from the corporation to me as an individual.
Yeah, you'd have to document it.
Sure. Yeah. Yeah.
If
But just
CRA,
simply a fee
asks.
for services kind of thing.
Yeah,
Very
absolutely.
good. Thank you.
Yeah.
Great. Thank you. So our next question was another anonymous submission, and I'm going to read it. It's about HST numbers. What can HST be charged to in our practice? How does HST relate to the taxes we have to pay as individuals? Also, do you have any suggestions of resources artists can turn to for concrete information about HST numbers that provide clarity for artists specifically?
Okay. That's a lot of stuff. The materials that are going to be made available addresses all of that. Briefly on the HST, it all depends if the taxpayer is registered for HST. The requirements for registration are if your revenue, your gross revenue, exceeds 30,000, either in one quarter or over 4 quarters, then you must register for HST, charge your clients HST on your services. And in that case, once you register, you can claim back, recover dollar for dollar any HST that you pay on expenses related to your business or professional activity. So in order to recover that HST, you have to be registered. If your income from self-employed activity is less than 30,000, you do not have to register and therefore charge HST to your clients or customers. In that case, you wouldn't be able to recover the HST you paid on your expenses. So if you are not registered, the HST that's in expenses is just part of that overall expense. It's a deduction. It's better to get the actual amount of the HST back because it's dollar for dollar cash. Whereas if you're not registered and can't recover HST, you can get it as an expense, but that isn't as tax beneficial to you. So that's why I suggest to clients, even if you are under the 30,000, you should consider registering for GST and start charging it if it doesn't have a negative impact on you being able to get business. And these days it shouldn't. That way, even though you're under the 30,000, you collect the HST, but you can recover the expenses dollar for dollar that you otherwise couldn't. And then as far as resources, there is, again, that's in the material. There's a lot on the CRA website. I provided a link to that. There is that document I referred to, that 50-pager, that really covers off most of the items in this presentation. And then there are very good resources from various professional associations. If I can, well, Toronto Arts Council for one, for example, TAPA, Toronto Alliance for Performing Arts, CARFAC, that's for visual artists, and then there's the Writers Union of Canada. They all have good resources for artists and tax issues related to their endeavors.
Thank you, Sam. Now pleased to welcome Paula Gomez for our last question.
Hello, my name is Paola Gomez, and I am a community artist and currently the program director for Muse Arts, a community arts organization. First, Sam, thank you very much. This is truly a like eye opener, and I'm also reflecting on the fact that this conversation should start basically at the end of the year, as well as the fact that it is also so confusing that I'm sure that many artists will prevent from applying for grants just for this, to avoid this type of issues. And now I'm bringing another question that is also up in there for many of us, particularly artists, and it is how should grants given to collectives be reported when you have 2 or 3 artists get together to produce a project. So how we deal with that during the tax season?
Okay, so by a collective, you mean individuals?
Correct. When all the public funders allow the creation of collectives in order to apply for projects, and by that I mean 2 or more artists could get together to present a project.
Okay, and so the funder gives a grant to ABC Collective, which comprises, let's say, 3 individuals.
Correct.
And at the end of the year, do you get a tax slip? Does the collective get a T4A?
No.
Okay.
You don't get anything.
They don't
from
get it.
any of the public
Okay.
funders.
And the collective, I'm assuming, is not a corporation. It is.
Correct.
It is 3 people or whatever.
Correct.
Okay. In that case, my suggestion is simply to report the income pro rata according to, I'm assuming everybody's equal in the 3. They all share in the grant amount equally.
It may not. It really depends in the type of grant that it is, because most of the time collectives will actually provide the artist the income to an artist fee. So basically you get the whole grant, and then the artist fee may be different for each of them based on their work in the specific project.
Okay. So for example, say the grant amount was 20,000. There are 3 people. One takes 10,000 as a fee. One takes 6, and the other takes 4. All agreed themselves. They're in agreement as to the split. They would just report their proportionate amount as, in this case, it would be self-employed income, because you don't have to worry about a T4A slip. So whatever portion of that collective grant or assistance received would be reported by each of the individuals according to what was agreed amongst the 3 of them.
But how about if it is, we're in the same example of the 20,000, and so the actual fees that one of them got is 5,000, the other one gets 2,000 or 3,000, and the other one gets 1,000. This because these are the actual fees, and the rest of the amount is on the production of the.
Yeah. Okay. So this would be after expenses. My example, I think you mentioned that, let's say, it was all artist fees. So that's how you would do it. To clarify your example there, if you received 20,000 and there was 12,000 of expenses, then there is 8 left, and so they report their proportion of what's left for them as an artist fee, because the other expenses would be the expenses of the collective. So that would be the simplest way to do it. Whatever is left over to them as an artist fee that they got to keep, because it's a collective. The collective is not a tax person. It's not a tax entity. It's a collective. It's a collaboration. It's so it's really, you're breaking it down to the individual. And if there are expenses against the gross amount shared for the project, and then whatever's left over is distributed as artist fees, you would report your share of what's distributed from the leftover part.
Okay.
Okay.
Thank you very much for that clarification. It's extremely useful. Thank you.
Okay, you're welcome.
Thank you, Paolo. Sam, someone in the chat is asking, does the same apply to incorporated collectives as well? I assume that would be an organization.
If it's incorporated, then it is a separate taxable entity. So it's a corporation. The corporation would report a revenue of, in this example, 20,000. Then it would report, project expenses of whatever the number I gave, let's say 12. And then if the rest was distributed as artist fees, they'd be reported as artist fees. And there'd be, zero income left in the incorporated collective, assuming that the artist fee amounts were distributed. So, and then the individuals who received the fee from the corporation would report that fee. So the individual would end up in exactly the same situation as before. It's just that if it was, the collective was incorporated, you'd have to report the gross amount of the grant, less all the expenses, and then less the artist fees.
Great, thank you so much. Unfortunately, we are running out of time, so we can't take additional questions. Thank you so much, Sam and Marcia and Rachel. And thank you to everyone who registered, attended, and sent in questions today. As mentioned earlier, recording of this session will be made available on the Toronto Arts Council website and YouTube channel. So please be sure to check back for a full recording and transcript in case you missed anything or want to share this more information with others. Sam, it's been invaluable to have you here today to share your expertise with us. Thank you so much for generosity of your time. And that's it for today. We wish you all the best this tax season. Stay safe and keep in touch. Bye.
Bye.
Have a great day.